Welcome back to Keeping It Real Estate with Azra, where we talk about the buying process in detail. So far, we've discussed the importance of hiring a realtor to work for you and what a buyer brokerage contract is. Today, we have with us a very dear friend of mine, Zar Karanjia from CIBC. We will be discussing the importance of getting a mortgage pre-approval. Welcome, Zar.
Thanks, Azra.
So, Zar, tell us a little bit about yourself.
Sure. I'm a CIBC mortgage advisor, and I've been doing this for the last 10 years. I specialize in residential and builder mortgages.
That's awesome, Zar. A question we get asked all of the time is, what is the importance of a mortgage pre-approval? Should I go out looking for properties first and then submit my documents to a mortgage specialist, or should I get a mortgage approval done first and then start looking for homes? What are your thoughts on that, Zar?
Right. So a pre-approval is very important because it gives you a maximum price point to shop for when you're looking for a new property. The pre-approval will typically include verification of your income documents, origination of where the down payment will come from, and a credit check to ensure you are well positioned to purchase once you have found that property. Your mortgage professional will be able to assist you with the pre-approval exercise and will also be able to guide you to become a strong applicant if you are not already.
So what you're saying, it is very important to have your mortgage pre-approval in place first prior to looking for a home. Am I correct?
100%, Azra.
Awesome. So Zar, tell us a little bit about our down payment options.
Sure. So regardless of the lender you use to obtain your mortgage, if you are applying a down payment of less than 20%, you will require mortgage default insurance. This insurance is offered via CMHC, Genworth, or Canada Guarantee. Your mortgage advisor will arrange this on your behalf, and it's important to note that the insurance premium is added to the total mortgage amount and is not an out-of-pocket expense. The other option is to apply a 20% down payment, which alleviates the CMHC insurance and results in a lower payment.
Okay, so in other words, if you are making at least a minimum of 20% down payment, your mortgage payment will be lower, as opposed to if you're making less than 20%, you will have a higher mortgage premium. Am I correct?
Correct. When you apply a 20% down payment, you have the opportunity to amortize the mortgage over 30 years, which will result in that lower payment.
Awesome. Another question we get asked all the time is, what is the difference between a variable mortgage and a fixed term mortgage? What are the benefits of what should I get?
That's a great question, Azra, and has become a very popular question. Based on the current economic conditions, it would be wise to opt for a fixed term. We have seen upwards pressure on mortgage rates for the past 12 months, and there is no indication that they will come back down in the short term. However, a variable product can still be the better choice if you are purchasing a rental property. A rental property should be treated as a business, and an exit strategy is always required with a business. As the penalty associated with a variable term is usually lower than the penalty associated with a fixed term, it would make sense to choose a variable product when purchasing a rental.
Wow. So in other words, if you are looking to purchase a rental property or something for a shorter term that you would like to exit out and without paying a penalty, it's always better to go with a variable mortgage. But if you know that you want to stay with your property for a long term, then go with a fixed.
100% correct.
Okay, perfect. What documents do you need for when somebody's going to sit down with you or any mortgage specialist in order to get their mortgage approval done? What do you guys require?
Sure. So income documents will be dependent on the type of employment. For example, a salaried employee would require a recent pay stub, their last notice of assessment, and a letter from their employer. However, in contrast, a self-employed applicant would require their last 2 years T1 generals, last 2 years notice of assessments, and their business financial statements.
So Zara, another thing is a lot of our clients are first-time home buyers. Any programs you guys are offering for that?
Definitely, there is a first-time home buyers program whereby which each applicant can withdraw up to $25,000 from their RRSPs. Whatever amount they withdraw from their RRSPs for down payment must be repaid back into their RRSPs within the next 15 years. A first-time home buyer is defined as an applicant who has not owned a home for the 4 years preceding the application date for the new property.
Wow, that's awesome. Again, since we live in Canada, we have a lot of new immigrants here. Any programs for new immigrants?
Definitely. We have programs for all types of interested home buyers. For new immigrants in specific, credit usually is the issue, and we have an option of using alternative sources of creditworthiness in order to satisfy the credit requirement that's required for a mortgage application.
Wow, that's awesome. Thank you so much, Zara, for coming in and educating us on mortgage pre-approvals.
Thanks very much for having me today, Azra. It's been great.
Absolutely. If you have any questions, please comment below and don't forget to hit the like and subscribe button. Stay tuned for our next episode where we will be discussing the buying process, the next step. Now you've got your mortgage pre-approval, sit down with your realtor again and go over your requirements.